Hello, my Teaserking family. I hope everybody's well today. I'm doing well. So I tried sending Rhea to Jenna today about 5 times, about 10 times, and I forgot that I changed my address at the bank for the debit card. So I'm in Rhea and I've done it, 20 times and it wouldn't go through. And I'm like, what the fuck? And then for some reason I thought of the address and then I looked and it had the old address. So then I changed it. And then I didn't realize it would take an hour to go through the system. So I'm getting rejected. I got enough money in there. What's going on? So anyway, finally I was able to send it to her. PayPal won't work to the Ukraine, but Rhea does. And again, but the debit card and that you've got on at the bank, the address, I had the old address on Rhea, so I had to put I had to change addresses to where I live now because that's what the bank has, and now that's what Rhea has, and it works. So anyway, just food for thought. If you ever can't get your Visa, credit card, debit card to go through, and you're like, what the fuck? I got money. Why isn't it going through? That's why it'll be. You've got, well, unless you're coming, I don't know what to tell you. I've given you the money and I've done everything I said I would. So if you can't come, then you can't come. But I gave you all I can. So you have a nice 4th, and if you can make it, great. I'm here. I would love if you come, but I can't do anything more than you need to pay the plane ticket and come here. That's all you can do. So apparently it is. That's what you were saying. I didn't like that you thought I would hurt you. That's absolutely ridiculous. Why would I hurt you? I don't hurt people. I got friends in the war in the Ukraine who meet me because I don't hurt them. I'm very nice to them. Anyway, so let's talk. So I go to our favorite store today and bought 20 more silver. They had a lot of silver. I got the buffalo. I don't like the Indian, but I like the buffalo. The buffalo's all right. I'd prefer a tiger or something. So I got 20 of these and another 1/10. Now I have 10 of these. And he made a comment of people, nobody wants a 1/10 because it was $250. And I was surprised he didn't change it to $230 or whatever. And I says, I don't care. I'm only spending $250 for gold. I can't spend $2,000 every time for gold. I can spend $200 for gold. So he had about 5 of these and he had 2 ounces, but I'll buy the 2 ounces the next check. Now I got rent and helping Jenna with her Rhea and stuff. So my money goes there. So this is like my silver paycheck and then my gold paycheck's the next check. And so it was good. He had plenty of silver. He's actually lowered his premium. He says they have more inventory on hand. And so they lowered the premium on gold and silver, which I am just shocked. See, the plan's working where people think it doesn't have a value, right? And inflation's lower, bullshit. And, they didn't keep going with interest rate. It's all a fucking scam and a con game. There's no fucking way that's truth. Why people listen to the government? That's why I tell you 9/11, the moon, Kennedy, it's all bullshit. 9/11 was a gold robbery. It wasn't a terrorist attack. We never went to the moon. And they killed JFK, the CIA. So what's really going on here, fellas? So, I don't know. So let's recap. You know what? Why don't we go? Why don't we do baseball first? Let's do the gold look. I don't know why. So silver's 2277 is about, add 2 zeros to the end, is about 2000. And gold at 1919 is an absolute joke. Everything is positive for Johannesburg BRICS Summit in August, where they'll announce. It'll take them a while, but they're going to announce a currency backed by gold. They do want to destroy the U.S. Nobody's going to trust Russian or Chinese currency. So anything they come out with is going to have to be backed by gold. As all the other countries are collapsing because of the inflation, because they're a bunch of fucking Keynesians, you're gonna have to run into gold and silver. There's no other option. There's no other asset and currency that you get besides those two. So that's where the gold stands. Why don't we do baseball and then we'll get into economics? All right. I had a nice lock on against the Tigers with Texas earlier in the week. Today is Friday, 6:30. The Cubbies up 6-0 in the sixth. Then we've got 5 o'clock games. It's 4 o'clock, so we got a good hour and a half. All right, San Diego, Cincinnati. We've got Lugo 3-4 against Ashcraft 3-6 with the 7. Yeah, I went to a game a year or two ago in Cincinnati with my friend from Alabama. He was from Cincinnati. Why the fuck he'd moved to Alabama? I've got to be kidding me. Anyway, I think we saw Ashcraft. He sucked then, and he looks like he sucks now. Let's take San Diego, Seth Lugo, 3-4 with a 4. I think the over-under in the game is 11. I think it's a bit high. I mean, it's Cincinnati, not Colorado. So I like betting against Ashcraft with the 7.17 ERA. Yeah, what's he doing in the big leagues? Washington, Philly, we got Josh Gray, 5-6 with a 3.43 ERA against Christopher Sanchez, 0-1 with a 4. Who's this pig? I've never seen so many minor leaguers in baseball. He's pitched 4 games, and well, he's not a reliever. Well, he's pitched 3 games. He pitched in April, gave up 3 runs in 4 innings to Colorado, shut out Oakland in 4 innings, and then in 5 innings he gave up 3 runs to the Mets. So the guy's a pig. I don't know. He's 0-1 with a 4.05. So he's not a reliever, but he sucks. And Josh Gray. So I like Washington here with Gray, but nothing big. Minnie in Baltimore. Minnie is under 500. Baltimore is 17 games over. It's ridiculous. Lopez for Minnesota, 3-5 with a 4.41 against Dean Kramer, 8-3 with a 4.50. And you can't bet either of these. I think you go over 9. Baltimore can hit pretty good. Minnesota, so let's go over 9. Milwaukee, Pittsburgh. Freddie Peralta for Milwaukee, 5-7 with a 4.65. Osvaldo Bido, sounds like the Penguin. Oswald Cobblepot doesn't even have a pitcher. 0-1. He's pitched 3 games. So he's not a reliever, bullpen guy. 0-1 with a 3.45. Gave up a run in 4 innings, 3 runs in 5, and 2 runs in 5. Actually, 6. He pitched 6 and 5. So gives up a lot of hits, a lot of runs, and it's like it's only in 5 or 6 innings. It's not like a 9 inning game, and he gave up 5 runs and 5 hits and 2 runs. It's in 5 innings. Over under of 8.5. I don't know. I don't like. There's not enough data. Boston, Toronto. We got Paxton for Boston. 3-1 with a 3.19 against Berrios for Toronto. 8-5 with the 3.60. Let's go under in this game. Two good pitchers. Berrios, I heard of. Paxton, no, but it's in Toronto. Let's go under. Boston doesn't hit as well away from home as we know. The 49ers against Bobby Bowes and Mets. We got Alex Cobb, 5-2 with a 3.09 against Carlos Carrasco, 2-3 with a 6.19. We're taking the Niners. Cobb, 5-2 with a 3.09. Bobby, what is Carlos Carrasco doing on the Mets? 2-3 with a 6.19. I mean, you got to score 7 runs to give him a chance. So let's take the Niners here. Miami, Atlanta, very good game. Miami, 48-34. Atlanta, 53-27. Brian Honig, 1-1 with a 2.31 for Miami against Sirocco, 0-1 with an 8.30. Got to go with Miami in this one. A 2 ERA against an 8. Again, what's this guy Sirocco? Let's look at Sirocco. What is he doing in the major leagues? He's pitched May 29th and June 4th. In 6 innings, gives up 5 hits and 4 runs to Oakland. And in June 4th against Arizona, in 3 innings, gives up 7 hits and 5 runs. This guy sucks. So which one? Where am I? So let's take Miami here. Almost a lock. Let's bet strong on Miami. And they're a huge dog. Oh, my God. That's crazy. Houston, Texas. I'll be Blanco for Houston, 1-0 with the 4.63 against John Gray for Texas, 6-3 with the 2.89. Got to take Texas here. John Gray, 6-3 with the 2.89. Good hitting at home. Houston's a good team, we all know. So it's really a toss-up, but I like Texas a little bit more with the better pitcher. The Dodgers in Kansas City. Bobby Miller for the Dodgers, 3-1 with a 4.13 against Alec Marsh. 0-0 with an 0.00 ERA. See another bullpen chucklehead? No stats available. So who is this guy? Against the Dodgers. The Dodgers are laying 2.25 with a pig, Bobby Miller. Let's go over. They're going to crush Alec Marsh. They'll probably crush Miller with the 4 ERA. I can't bet pitchers who have a 4 ERA. Detroit and Colorado. Lorenzo, 2-5 with a 3.97 against Austin Kummer, 5-7 with a 7 ERA. Lorenzo, 2-5 with a 4 ERA. So we're going over 11 with this one. Colorado with an ERA of 7 with their pitcher, and the Tigers with a 4, but he's 2-5. So you can't bet either pitcher to win. So let's go over Colorado. Yankees and the Cardinals. Servino for the Yankees, 1-2 with a 5.25 ERA against Matthew Liberatore, 1-2 with a 5.60. We got 2 5s. Let's go over 9.5 in this one. Arizona, California. We got Henry for Arizona, 4-1 with a 4.31 against Griffin Canning. Where do they find these guys? 6-2 with a 4 ERA. Over under of 10's a bit much. California did score 25 last week, but that was it for the month. I can't take a pitcher with both pitchers over 4, so I guess we'll go over 10. The White Sox in Oakland, Tanner Banks, 0-2, 4.50 for the White Sox. Luis Medina, 1-7 with a 6.84. Another pig for Oakland. We got to bet the White Sox here. And last but not least, Tampa Bay, Seattle. We got Shan McClanahan, 11-1 with a 2.23. Bryce Miller, 5-3 with a 3.88. So the question is, do we take McClanahan or do we go under McClanahan? Hit the wrong. Okay. Well, we know McClanahan. So if I look at Bryce Miller, 4 innings, gave up 6 to Baltimore. 7 innings, gave up 1 to the White Sox, gave up 6-1 to Miami, 7 to Texas, 8 to the Yanks, 0. So he's really inconsistent. Tampa can hit. Let's take McClanahan. Lock. It's a lock, Nick. We're locking McClanahan. Bryce Miller's okay, but he's not Verlander or Scherzer, so I'm going to take McClanahan in that. So our lock, McClanahan, Tampa Bay. Scherzer lost last game, but he kept it under, and he was playing an under pitcher, so that made sense. Verlander, I don't know what he did. I don't recall. But they're not back-to-back anymore. It's Scherzer, somebody, and then Verlander. All right, that's baseball. Let's go to the camera. No, I don't want to go there. I want to go to the gallery. This could be the stupidest thing I've ever heard. So this idiot is saying, he's saying choke. So he's saying that there's a $75 trillion reason the economy won't crash in a recession. Top economist, didn't come to me, says baby boomers pent-up net worth. So these morons totally don't understand a recession, think that because the baby boomers have, them after World War II, have all this money, that they're going to spend it, and that means there won't be a recession. It's not about how much money you have if there's a recession or not. Recession's a slow economy because you're raising costs because you're got inflation and you are raising the interest rates. So if you wanted to, you're not buying a house or a car because the fucking interest rates are too high. Which leads you, just because I have money, take me. I like my spare ribs. Short end. So I just went to this meat market the way home from swim after the coin store. I had a busy day. I worked, then got my coins, then went swimming, and then got some steak and ribs. All right. Now I have 10 of these. That's all. That's what I want. I wanted to. Now I got here's 1 ounce. Boom. And just because I have money doesn't mean I'm gonna use my money to buy this because it makes sense, right? I'm buying $2,000 an ounce silver coins for $25. That's what people with money should be doing, is using their fucking brains and looking for discounts and making money on their money. We always want to make money on our money. This was $250. When gold hits 50,000, this will be worth 5,000. I picked it up for $250. It can't go down. It can't go to zero. You can't tell me I don't have it. So just because I have money or we have money or anybody has money doesn't mean you're going to spend it, and you're going to spend it wisely. So it's not like the baby boomers are all going to buy houses and cars because they have money. The recession's here because of the inflation, mostly, which is a devaluation of the currency. I'm so sick of people thinking it's prices. And because of higher interest rates. That's why you have a recession. You're slowing the economy because things are more expensive. It doesn't matter who has fucking money. What do you think? Well, Bill Gates and Warren Buffett have money, but you're still going to get a recession. Redirecting business cycles is hard. Just ask the experts. Nobody's asking me. For over a year now, Wall Street economists, billionaire investors, and even former Federal Reserve officials have repeatedly predicted an incoming economic downturn. Well, it's already here. It's not like you're predicting it. It's been here for a year. But so far, the labor market and consumer spending have remained resilient. Inflation is slowly fading. No, it isn't. And first quarter GDP growth was just revised up to 2%. Well, because of the inflation, you, of course, have GDP growth because GDP is how much money you have. That doesn't mean anything. So you grew the money supply. That's inflation. You didn't do anything. As the alligator says, it's about the standard of living, not the GDP, not the growth. So here's another interview by Will Daniel, who's a fucking idiot. Many have been surprised by the economy's ability to cope with consistent headwinds over the past few years. See, if I tell you the sky is purple, and unless it's a storm, it's blue. Let's say I tell you the sky is green. If I keep lying to you enough, you're going to believe it. Well, professor said the sky is green. Well, no, it's blue. Well, no, but he said it's green, so I trust him. So if they keep lying to you about the economy and inflation, inflation's coming down. In what world does inflation ever come down? Let's ask the Romans if inflation came down. It doesn't come down. That's the problem. You printed the money's worthless, the money loses value, the money doesn't gain value. It loses value because it's not limited anymore. What's our thing in our economics? It must be limited. This is limited. I like this. Now I can put up my gold against the dollar. This is limited. This is not limited. As simple as that. This is limited. That's why this has a value. This they printed 10 trillion of is not limited. It has no value. Everybody is getting out of the dollar, this de-dollarization. Doesn't matter if they're in it or not. The dollar's being inflated to zero. Did everybody leave the British pound when it went to zero? Or the Amsterdam dollar or the Roman Empire? Did everybody leave the Roman Empire as they took all the gold and silver out of their coins? I don't know. I mean, that's the point. Once you have the inflation, it doesn't go anywhere. So your best move is to do what I do. Do as I tell you. Buy gold and silver. This is the only thing that can possibly save you because it's not priced in dollars. I mean, gold might be priced in dollars, but it doesn't need dollars to have a value. It's got a value because it's gold. Gold has its own value, and dollars should be priced in gold, not gold in dollars. That's the first little misstep here. Let's see what other goodies I got here. U.S. listed home prices post first drop since 2017 as buyer demand cools off. Well, I find this hard to believe it's the first drop since 2017, but demand cools off because prices. It's all economics. The more you charge, the less you sell, the less people will buy it. Right? So if this is $5, we got a line out the door, people wanting Canadian Club 12-year. We make it $500. It's just on the shelf. Nobody wants it. So as we raise prices, demand cools because people will pay a certain amount. I'll give you an example. Yesterday I ate at 25 Guys and Fries, right? I get the 2 hamburgers. It's $10.50 for 2 hamburgers. I get a whole fucking pound at my meat place, which is more of a big an expensive meat place. I get a pound for $5. I can make 3 hamburgers for $5. They're charging me 10 for 2 little patties that aren't even it's not even a quarter pound. I just look at them. This is why I go and buy, and this is why I cook. This is how you substitute away from them. And then you wonder why 25 Guys and Fries goes out of business. Why does Burger King go out of business? Because they're too expensive. 5 Guys and Fries, I'll never go back there. I told the guy I went to one in Barcelona because I couldn't find a normal place to eat, and I was getting hungry. So I ended up just getting a 5 Guys and Fries. And I don't think it was this expensive, but they were $10 for a burger. And then I got a burger and a hot dog because I was kind of hungry. And the hot dog was $6. You ever hear of $6 for a hot dog? So I paid $18 for a hamburger, which was 2 patties and a hot dog. And I'm like, I'll never eat there again. I mean, I can go get a hot dog at the gas station for $2. That's fine. And I can make my hamburgers for $5. That's how you defeat this. That's how a good shopper does. Now you've got to be willing to cook your own food more than likely and go to the grocery store and buy a hamburger and buy steaks. Today I bought a steak and I bought 3 slabs of ribs and a nice big steak. I'll have one. I got Chinese tomorrow, so I'll have one Sunday and then one's for New Year's Day. How about 4th of July? So I am going to work Monday, and then we're closed Tuesday, 4th of July. So I'll have the ribs for 4th of July, and I'll have the steak Sunday and the Chinese tomorrow and Sunday. But that's fine. I got a little bit of chicken left for dinner for tonight. I'll make an omelet. But I'm already done. I'm done with the swimming. I'm done with the gold. I don't have to go tomorrow. And they're closed Saturday and Monday, the gold store. I'm surprised. So they're closed. I don't know. I'm surprised they lowered their premiums. Really shocking. But anyway, U.S. listed home prices post first drop. The prices post drop, not the demand. I read that wrong. U.S. listed home prices that's because they see that the Fed didn't raise interest rates. But it's not that the prices, it's the interest rates that's killing the housing market and the car market. Again, in order to get my money back from lending it out, I have to charge a higher interest rate. Otherwise, I'm going to get this shit back. Right? So if I give $10,000 of this crap and now it's worth this, I got to charge a big interest rate to get my 10 grand back, plus the risk of getting paid back. And I actually want to make some money. So I want to get 13,000. Now what Alligator's saying, Alistair McLeod, that we're at the stage now where banks don't really want to do loans because of the inflation. So they're worried about people paying them back. And they're tightening up their balance sheets, so they're calling in their loans. They don't want to loan out. So I don't know. Maybe if you have really good credit, you can get a mortgage, but you got to be out of your mind to buy a house now anyway. Only Canadians do. Tesla just announced its next mid-$100 billion bill. I don't want to hear about this. Fed Chair Powell, inflation will be significant about, what's he saying? Fed Chair, inflation will be significantly about supply and demand in the labor market. Okay, this is the Federal Reserve Chairman, and he doesn't know what inflation is. Inflation has got nothing to do with supply and demand in the labor market. What does the labor market have to do with inflation? Absolutely nothing. You're printing the money. It's worthless. Hello, McFly. Is there anybody home? That's what it is. It's got nothing to do with the labor market. Why do these people think it's got anything to do with the labor market? They're just trying to sell you a bill of goods and point the finger at the labor. Oh, it's the labor. It's not us. It's the labor market. We didn't print $10 trillion making this valueless. We're going to blame it on supply chain and prices. We're going to blame it on the labor market. But it isn't us printing $10 trillion causing the inflation. Nah, don't even go there. Unbelievable. Now, let's see. Now, I read this. Here's why Elon Musk is slashing the price of the Tesla Model 3. Because there's no demand, number one. You're overpriced, number two. Had a conversation about just this. You got 300 miles. Okay, now is your battery going to blow up? Is it going to catch on fire? And where do I recharge? Oh, and by the way, it'll take me 8 hours to recharge. So I really want to drive from Detroit to Florida and every 3 hours do a treasure hunt of, oh shit, my battery needs to be charged as I pass 1 million gas stations on the way that I could have easily filled up if I had a gas powered car. And then I got to sit there and take 8 hours to charge it. So I can imagine you're at the hotel at night, you're at a Marriott or anywhere. And where do you charge your car? Or are you out charging at 2 miles from the hotel? And then what, walking back to your room? And then waking up and walking back to get your car as it's finally done charging? What a stupid concept. This electric car is got to be kidding. Here's some joker. It's going to be ugly. This CEO issued a dire warning about U.S. real estate, saying areas will be destroyed. But he still likes one niche. What is it? And more smart ways to invest. Well, the only niche is gold. So I don't want to hear anything else from a CEO. Oh my God, he must be intelligent. The CEO issues a dire warning about U.S. real estate. Well, let me think. Let's see, 25 trillion in foreign ownership of my real estate. That's all going to get out of the dollars. Interest rates driving the cost way too high. Nobody can afford the price. Think of a house as Canadian Club. It's the same thing. You make this $1,000 a bottle, you're not going to sell it. You make the house $600,000 a house, nobody's going to buy it. You can't just, I'm going to sell this for $10,000 a bottle. Well, you're never going to get a buyer. You can only get buy. You have to go back to Say's law and the market. I put this on sale. What will the market buy it for? And then you reach the price. Well, let's see, $30. Well, went off the shelf. $50. Well, went off the shelf. Okay, $70. Okay, they bought, but there's a little bit left on the shelf. Okay, let's go $65. And everything I put on the shelf, I'm making the most, and people are buying it. So if it's too high, nobody buys. If it's too low, I can't keep it on the shelf, and I'm not making enough money. This is the market. Be it a house, a car, my gold, my silver. This is the market. So when these idiots are selling this for $25 an ounce and even lowering their premiums, I'm buying a $2,000 an ounce coin for $25. I'll buy that all day. They are too stupid to understand it's not a $25 ounce of gold or silver. But I understand that it is. So it's like, well, I'll buy another 20 ounces. I'll buy another 20 ounces. I mean, especially now that I'm back to work, I'll buy another. Oh, I can buy this gold for $250. Okay, thank you. And granted, if I bought 10, it's $2,500 versus the ounce, which is $2,000. However, in my mind, I could buy $250 today. I could spend $250 on this. I can't spend $2,000 every freaking week. But now that I have 10, I won't buy any more of those. But okay, the next check, I don't have rent. I'll buy probably 2 ounces of gold. And that's how it works. But sometimes, oh, it's only 500. You don't look at, well, 10 of them cost me 2,500 because you don't care about the cost. You just, I got an ounce of the tenths and they'll come in handy. Now, it's not for barter. It's just to have different denominations of gold. That's the whole point. So let's understand what a market is. I produce at my job. I am in finance. I do football. I teach economics. I'm producing. Now here you're not paying. I'm not making you pay. People pay me at my job. I go consume. So I take what I make and I buy the whiskey and I buy the nuts and I buy the gold and so it's my choice what I buy, but I buy. But I can only buy by producing my skill of finance. Then it comes, I'm the market. What do I want to buy? I got cherries. I got gold and silver. I got nut. What do I want to buy? I don't know what I want to buy. It's whatever hits my fancy, but I go buy it. That's what the market is. There's a bunch of people like us who work, who make money, and then decide what we want to buy it on. Nick likes the burrow cards. I like the golf clubs. The whiskey. I like the silver and gold, obviously. So now that we come into choices, there's cherries, which are just like I'm going to eat something. Then there's investments like this, or buying an asset. Why do people think this is only good when the economy's in trouble and it's going to go up? This is an asset. If they got out of the fucking way, JP Morgan, this would be worth what a Mantle card's worth, or what the same thing as a Rolex. This and a Rolex, there's no difference between a Rolex watch and this. No difference. And a Rolex is worth plenty. If there's good times or bad, it's probably worth more in good times. More buyers. So this is price fixed by JP Morgan. I'll show you some videos that I just can't believe how stupid these people are. The Federal Reserve thinks catastrophe is coming to the U.S. Thanks to me. I fucked everybody. Top central bankers assert need for higher interest rates to tackle inflation. This is around the world. Oh, my God. Why don't you come out with gold-backed currency? Then you wouldn't need this shit. They're so fucking stupid. But as we know, these central bankers aren't bankers. They're not. They're not elected. It's not even a company because this is the central bank. It's not like Chase or the Bank of America. Threatened by shortages, electric car makers race for supplies of lithium for batteries. Oh, so we're going to come out with electric cars, and what does it need? We need a battery, and what does it need? It needs silver and it needs lithium. Oh, well, wait, there's not enough. If everybody bought an electric car, there's not enough lithium and silver to make the batteries in the first place. Then there's not enough electricity for everybody to plug in, and there's not enough stations for people who are driving to plug in their electric cars. And it might catch on fire. And what do I do when I come and park now? So what you want me to do is get an electric car. I just parked it at the front here by my door. How the fuck would I charge it? What, I gotta run a cord from my kitchen to my car and leave my door open for 8 hours? This is your big plan? Well, you know what? I got gas, so I go fill it up because there's a gas station in every corner, and it's on 3/4 of a tank. I don't need to fill it up now. I don't need to do nothing. I lock my car up and I come in the house. I don't have to worry about it. And if I need gas, there's a gas station. Every mile, there's a gas station. Where's the charging station? I have no fucking idea. How much is it? I have no fucking idea. It's going to be a lot more. Not enough lithium. So tell me where any of this is going, because they're all a bunch of fucking idiots. Chevy pulls the plug on the Silverado EV dead before it even arrived. No demand. Say's law. Nobody wants it. You can't make it. So the Silverado, how much money did Chevy blow on that one? India is gearing up to be the new China, but even Elon Musk is finding it. So what it is China was good because it was cheap labor. Now it's not cheap labor anymore. So now everybody's moving to India because they have all these people who are poorer than dirt and farmers and cheap. The ones we see here are the rich ones. They're the doctors, they're the IT folks. Okay, that's what you see. And I always laugh whenever I see a business run by an Indian guy. I just laugh. They don't know what the hell they're doing. Why would they know what they're doing? I don't mind the Germans. They can run a company, not the Japanese, and certainly not the Indians. They are pathetic at having any skill set to run a company. So when I see that, I don't want to get involved. I know nothing good's going to come out of it. Okay, that's it. Let's go to my videos. Okay. So first we're going to do Alligator McLeod. He was on 2 days ago or yesterday. Yeah, 1 day ago. So I marked down his times. Unfortunately, he was on with that irritating guy from Liberty and Finance.
This is the best natural painkiller you'll ever find. Some people even compare it to morphine. Wait a minute. What?
The morphine drip. Okay, so I've marked it at the 12-minute mark. So what he's saying is gold back. He doesn't even say it. Dollar's dominance is toast, which we know. So a lot of these were really not anything that we don't already know at our level. We're at a master's level. So when these guys, Andy Schechtman, new money needs gold. So you're providing a gold standard. Really, you're just figuring this out now. So he'll say that the new currencies must be backed by gold. Well, yeah, so are these, but they don't back them by gold, so they're not going to be worth anything. But what are you really telling us? You're not telling us anything. You need gold-backed currency. Hello? It's like so simple, but these guys, what is Andy Schechtman just talks the talk because he doesn't say any fucking thing and nothing. He doesn't give you any new. And in it, he doesn't say, he doesn't understand COMEX and physical yet. He's still, why is the gold price down? Well, because of high interest rates. Oh, God. You're a fucking moron. Oh, my God. All right, let's listen to Alligator here. So I got it at the 12-minute mark. So they're talking about Ukraine, whatever. All right, let's go to about there.
I think we ought to knock out of this, actually. There's something like 31 countries which want to join BRICS or have expressed an interest in joining BRICS.
31 countries.
This is quite something. So now, why does this matter? Well, I think as soon as it becomes obvious that there is a new currency which is definitely being planned, and it would have to be around gold. I mean, that's the only thing that works. The market might sort of have a little bit of a think about this and conclude that this is actually pretty bad news for the dollar. And that's the key thing, because it's the dollar's hegemony which is being challenged by this. They are seeking to replace a currency which is the monopoly of one country with a new currency which does not have monopoly ownership, and which can, under the umbrella of which free trade can develop amongst this 33% of the world's GDP. This is potentially a very, very big deal. Now, it's not going to happen overnight, but you can see that as soon as the market understands that the dollar as the reserve currency is toast. I mean, I know that if you look at the statistics, you see that, I don't know, 85% of global trade is all done in dollars and so on and so forth. Yeah. But that's history. What we're now seeing is something which is a very definite challenge to that domination of the dollar over global affairs. So what I see really, and you touched on the subject of gold just a little earlier, what I see really is two things. I think first thing is that when Putin has a crack at Ukraine, we don't know how it'll turn out, but I think he's probably a bit better organized this time than he was when he first had a crack at Kiev. If you remember, the forces came down from Belarus and they got really within the suburbs of Kiev before they were driven back. I think this time it's likely to be somewhat different. He's got, I think, a sensible plan, or at least I've got a sensible plan, which he might follow. That's probably a better description of it. But I think this is very, very likely. That is the first thing that will drive up the price of oil, the price of other commodities, in anticipation of nothing else for the West's attempt to sort of impose even greater sanctions or whatever it might be. I mean, we're looking at a war situation where Ukraine is just the proxy. An acceleration of this situation is not going to be without its dangers. So that's the first thing. And the second thing is that once it becomes clear that there is going to be an alternative, a viable alternative trade currency to the dollar, then I think that's going to undermine the dollar further. So we have an interesting situation. And the other thing I would say about people who might be concerned about the declining gold price at the moment is that the reason cited is that interest rates are not going to come down soon. You've got you've got people sort of seeing the U.S. economy is not really going into recession. If you look at the unemployment numbers and so on, look at the statistics which the Fed looks at, and where's the recession? It's not in sight, sort of thing. Now, all this is a bit will-o'-the-wisp type stuff, but you can see why the traders in the paper markets would take the view, because they're all Keynesian, they would take the view that if interest rates are going to remain higher for longer, then that works against gold. Conveniently forgetting that in the 1970s, we started the decade with gold at $35 and the Fed funds rate about 6.5%, something like that. We ended the decade with gold at $850 and the Fed funds rate at 19-20%. So,
oh, alligator, he's adorable. So, how many times do I say this is the only so this is the competition for this? And that's kind of what he said, but I'm already way ahead of the curve. So this is the competition. Now the US doesn't want you to think this is the competition. That's why the prices are low. That's why my guy at the coin shop is lowering his premiums on this and on silver, because people don't think they don't think gold and silver has a value. It's not going to go up. I'll buy stocks and say, hey, look, the economy's better, the inflation's down, the stock market's going up. I don't need gold and silver. I'll put my money in Microsoft. Big fucking mistake. However, try telling that to people. They won't fucking listen because they don't know anything. So they'll listen to their broker. We're going to have an attack on Wall Street. They're going to not just hit a few guys. They're going to wipe out all the brokers on Wall Street. Because Wall Street's there for the commissions. They don't care if they make you money. So we know this is undervalued because we understand the game. You print this to zero, it's going to zero. The Titanic hits the iceberg, it's sinking. It's not like, Oh, you know what? So it reminds me of in the Titanic when the boat starts going under, and then it starts going under, and then it like breaks off, and then this part goes up a little bit. So half the boat is in the water, and the other half broke, and now that's going up. That's what it reminds me of, is people this stupid thinking, oh wait, we're okay. So the only competition for this is this. And that's what BRICS is going to do. BRICS is going to come out and say, they're not even going to say it's competition. We're coming out with a currency backed by this. What would you rather have? Something that can't be printed and can't be inflated and is going to go up a lot in value because it's been price fixed, or this shit that's worth nothing? What would you rather have? Although they won't be as eloquent as me to tell you that. I'm telling you the reality of things. Not that, oh, the housing market might not be bad, or the car. No, the housing market's gone. The car market's gone. Why? Because this is worth shit. And when this is worth shit, how are you going to buy the house? You need a loan. And who's going to loan you the money? Some bank. And guess what? They don't want to get paid back in inflated dollars. So your interest rate is going to be 20, 25% if you want a house. Good luck finding a bank who even wants to loan you the money in this economy. Now, if you have this, you don't need a bank. You can walk in and go, okay, I'll take your house. And the guy goes, oh, you can have it. For gold? You give me gold? So that's why I'm buying it, because this is going to zero and I'm 100% certain of it. I got a master's in it. I understand what the fuck's going on. You can't stop it. The only way you can stop it is do what Zimbabwe did, which is coming out with gold back, with gold money, which will drive the price of gold up anyway, because if you get real supply demand on gold, and and this is physical, and you're getting rid of paper whiskey and you're selling the real stuff. So as you sell this is running out, right? There's not, how much of this is left? How much silver is left? Not a lot. And as long as this mother says 1 ounce, 999 fine silver, as long as that is on it, and I know it's fine silver. It's funny how some of it's like got a year, 2011, and most of it doesn't. But as long as I have that, and as long as I got this, and it's small, it says 1/10 of an ounce, it's worth $5, something like that. This is dated. It's so small I can't read it with my glasses. This is like, if you get it in the right light, this is worth $5. The quarter is worth 10, the half's worth 25, and the ounce is worth 50. Living in fantasy land, which is back in the Roman Empire. See, that's how they priced it, right? So this was really worth $5, and then I would sell my goods and services in $5 or $10 or $25. So I would take a half ounce, and there'd be something for $25, and that's what I would buy it. That's when you have real prices, not this shit. I got ribs at $12.99 a pound. That's how bad the dollars drop. The prices of ribs aren't that expensive. It just takes $12.99 a pound to buy it, because that's how bad the dollars shifted. I noticed the steaks today were a little hot. $15 New York strip, Delmonico 20, sirloins $12.99. So they were all, and they're not. It's not because of them. It's because of the dollar going down. But I'm the market. So I say, fuck you. I'm not paying $20 for Delmonico. When you're ready to sell them for $10.99, then we'll talk. But $20, I'm not buying a steak for $20. I've had enough steaks in my life. I don't need to. I'll buy one. I bought a sirloin that was $9.99, and it's a big 2-pounder. So that's my Sunday, Monday dinner. Tuesday, the ribs. But that's what you do. This goes away, and then the plan is I got 20 here, 2 ounces of gold. Once this goes to 1/10 of the ounce of gold. That's the idea. All right, back to Alligator. So I got his next segment at the 19-minute mark. So let's scroll this to 19. I forgot what this is about, but it's about the banking system. All right, well, listen to the. Oh, you're kidding me! I got a fucking.
Hi, I'm Danielle.
Shut the fuck
I'm going to show you
up.
what's inside the 4 Patriots 4-week survival.
Don't you hate these fucking ads in the middle of something? Come on.
Economy of that entire decade.
This guy's an idiot.
High interest rate, which you've described to us as a very difficult thing. It could be toxic for banks if it drives down the value of their bond portfolio, et cetera. Is that a transition that they need to get through, or is it really likely to be cause bank failures in increasing numbers because banks simply can't ride that out? Once their bond portfolios are marked down, then
Ask your
they're
question.
stable again, or is it just that's
Ask
too
your
much for them
question.
to survive?
Well,
So he's asking a question that he's already knows the answer to. It's like saying, why is the gold price down? And these guys will sit there and they'll go, well, it's because of the higher interest rates, when they know damn well, or they're just too stupid to understand it's about COMEX. Prices are down because COMEX is writing paper gold, not physical. It's the paper shit. That's why the prices are down, not because of this. The demand for this is through the roof. So that's the point. They know the answer, but they ask the question anyway. Well, the high interest rates, aren't they going to hurt the bank? Well, yeah, we already know that they got their money in bonds, and the bonds are worth by the higher the interest rate, the less the bond's worth. The bond value drops with interest rates. Well, he already knows the answer, but then it takes him 45 seconds to spit the question out. Just ask the fuck, get out of the way. Let Alligator answer the questions. Get out of the way. Stop asking your stupid question like he needs to be on, like he's doing it to be on the thing.
How can I describe it? It's a situation really over which nobody has any control. I think forget about inflation. Well, not completely, but put that to one side. What we're now seeing is contracting credit. Why are we seeing contracting credit? Because banks' balance sheets are over leveraged. The relationship between assets and shareholder funds are pretty much at all-time highs. And this is something which basically means that any loss on the balance sheet is magnified by that ratio on the shareholders. So bank directors are now very aware of this. So we've transitioned from a time when bank directors were sort of quite happy about the future. So business as per normal. The reason that a bank has increased its balance sheet leverage is because with zero interest rates, or in the case of Japan and the Eurozone, negative interest rates, margins become horribly compressed. So how do you maintain your profits? Well, the answer is you increase your leverage, and that's what they were doing. But we're now in a situation where any bank director who doesn't actually think, hold on a minute, we've got escalating risks, they should be sacked, basically, because that's the situation. And not only is that the situation, but you've got a cohort of bankers all thinking the same way. They're bound to think the same way. They see increased non-performing loans, as they politely put it. In other words, borrowers going bust, and they don't want to impose their losses. It's not their function to expose their shareholders to those risks. So they're going to try and contract their balance sheets. They're going to try and not lend. And it means that, if you're a businessman and you have, say, an overdraft facility at your friendly bank of $1 million, you go in to get it renewed. The banker says, well, I'm sorry, we can't give you the $1 million. We could probably do $500,000, but it is going to require more collateral and it's going to require a higher interest rate. So you can see what's happening. It is, what I'm describing is a credit crunch. And it's that is going to drive up interest rates from here. I don't care so much about the inflation prospects. I mean, that is obviously something which is desperately important. But in this context, it's really all about a credit squeeze. And
So let me explain that. And that's what I was trying to say before. So I want a house, and you're not going to lend me the money because of inflation. You're worried about getting paid back in inflated dollars. I'm kind of filling in the blanks, what he's not saying. And so the bank says, I'm not loaning it to you. So then I got to go to another bank and another bank and another bank, as does other people wanting to buy a house, and they can't find one. That's what a credit squeeze is. They only loan out $1 million, and there's $10 million of people wanting $10 million to borrow, but they're not borrowing it. So they raise the interest rates to take the risk away. I'll lend you the $1 million, but now you're going to pay me 25%. That's what he's saying, that interest rates have to go up. I'm explaining the why. Okay, I'm not just saying interest rates are going up, but I get into why, right? I break it down for you guys. So that's why, because if I give you 10,000 or I give you 100,000 at 7%, and you're going to take 15 years to pay me back, the best I'm going to do is get $5,000 back, if that, because in 15 years, this won't have any value. I'm fucked. I've just said goodbye to $10,000. Well, that's not a good business practice. I'm in business to make 20%. Otherwise, I can go buy gold and silver and don't need a business, which is exactly what I'm doing. Why would anybody go into business when you can buy this and you can buy this and just sit there and wait till it goes up to the moon? Why would you go into business and risk and spend your time when you can just sit back and go, I got gold and silver. I don't need to do anything. I just got to wait for it to jump, and then I'm fine. I'm retired. Go buy an island somewhere. And on my island, it's going to have gold and silver in it, I guarantee you. But that's what the point is. So this is why it's a supply-demand game. If 100 people want this bottle and I only got one bottle, how much do you think it's going for? It's going to be pretty expensive. However, if I have 100 bottles and I only have one buyer, the price just got cheaper. That's Say's law. That's how we live, right? So if the demand outseeds the supply, there's 100 people for 90 bottles, the price goes up. This is why I'm very confident on this, because the demand for this, between batteries and solar panels and money, the demand for this is so high, far higher than the price. But yet, why doesn't the price go up? The demand's there. See, that's why I am so optimistic about this price going way up, because the price action doesn't replicate the demand. So the demand is there's 1 million ounces being sold, but the price isn't going up. In fact, the price is going down. Well, how the fuck can that happen? Oh, you mean it's price fixed? Well, how the fuck are they letting that happen? Why aren't they controlling the price like every other product, like a Mickey Mantle card? The Jordan rookie's $1.5 million? Well, because they're not controlling the price. So that's the actual market, but that's not what you have with gold and silver. That's why I'm so optimistic, and that's why I know for sure it's going to go up, because you can only hold it down so long until you've got when there's no demand. That's why for 50 years it's been held down, because for 50 years there's really not been the demand for it. You can make money in Microsoft and Tesla and all these other stocks. So you didn't need gold and silver, but that's coming to an end because the demand for gold is too high. It's strong and getting stronger, and it's demanding a physical market. All right, back to
rising interest rates. Of course, you get falling bond prices, rising bond yields, as it were. You get falling asset prices, all financial assets. You also get falling property prices. So you can see that we're locked into a cycle which is entirely predictive. This is the way the banking cycle has worked ever since. I mean, we've got records going back to just after the Napoleonic Wars. It's what happens. And this is why the Austrian economists, are so anti what they call fractional reserve banking.
Don't fuck
but
with
actually
me.
It's credit creation by the banks. Because they see these crises, it drives the business cycle. The reason that you get this sort of cycle of ups and downs, boom and bust, however you like to describe it, is because of the behavior of the banking cohort. We are about to tip into the nasty side of that cycle. And it will involve a credit crunch. It will involve banks trying desperately to contain the risks on their balance sheets. And if you throw in the geopolitical problems, which I've just described, on top, you can see that it just exacerbates that situation entirely. So that, I think, is roughly where we are.
It's clear to most people that high interest rates mean that their asset prices, whether that's stocks that they may be holding or whether it's real estate, the prices what homes can sell for, that sort of thing, is immediately dampened by a high interest rate environment. What's not clear to most people is how that hurts banks and whether that puts them at additional risks of their deposits that they have in banks. Can you touch on that? Just so that
This guy's so stupid. How does high interest rates hurt banks? Because all their investments are getting killed if they're in lower interest. So what the banks have done is gotten themselves in the bonds, which are low interest rates. But they're long term. They're not short term. So as they're waiting for the bond to go, the interest rate goes up, the value of the bond goes down. That's what happened to Silicon Valley, and all these banks are doing that. Why does it take him 20 minutes to ask a fucking question? All right, I can't stand that guy. Let's go to Andrew McGuire.
Folks, it's time to sound the alarm bells. The crisis that we warned you about is finally here.
Oh,
This
isn't that
actually
nice?
comes with a bit of a...
All right, Andrew McGuire on this morning. I need to get 2:18 minutes. See, right now I just listened to it and then I write down, go to 1:18 minutes for the class. So that's what I do. But it's better. The guy doesn't ask too many questions and they kind of let Andrew go. I get annoyed when they have guests because the guests are stupid. And I don't need a guest to say, oh, yeah, the gold price, yeah. And then he goes, well, it's price fixed. It's paper price. And the guest is like, oh, really? I didn't know that. And this is my problem when he has guests on. They're so stupid. Unless it's Egon or Alistair. But when Alistair's on, it's almost a waste of time because let Andrew put his point of view and we'll listen to Alistair on the other show. And then everybody in between just repeats the same thing. Oh, the gold price, it doesn't do well. I love when they explain it. The gold price doesn't do well when the high interest rates. How the fuck would you know? I could get some water. How the fuck would you know they haven't been marked at physical ever? So if we go back to football, that's like me saying, oh, we got to take New England as a road dog. Look what happened when Brady was the quarterback. Howard Brady's not the quarterback anymore. You can't look at the New England trends. That's why I go back to it, because of Brady. And that's the whole point. You can't look at what happens under Brady when he's not there. You can't look at gold prices in 2008. A, they're COMEX price fixed, not physical, and B, the same thing isn't there. All right, so let's get to alligator. This is Andrew. We'll start off with the introduction.
To take action to secure real bullion as soon as you are able.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew McGuire.
Welcome to Life from the Vault. Yeah, sure.
And goodness me, I mean, using the COMEX futures exchange for what it was designed to do, hedge risk, my goodness me, what's going on? So bottom line, the Fed, relying on the COMEX to leverage gold to attack these siloed clients, are finding that the 50-year window to do so is rapidly shrinking their ability to do so. Yes, there's still enough to cause volatility, but not to the degree that they used to have. And remember, as we've illustrated into every Fed-driven event, the dangle bait to buy dollars and sell gold into a dollar index rise consists one part of an unbacked, rapidly depreciating fiat dollar, and then selling an equal amount of fiat gold, both consisting of branded casino chips played at the pit manager's rig tables. Now, these chips are valueless outside the casino and can only be cashed out as dollars inside the casino. So people who think they're trading gold are not trading gold. They're trading a move in gold. However, it's important to understand that while this 95% house-rigged win-lose action is corralled inside the illusionary world of the COMEX casino, we spent a lot of time looking at it last time, global players, that is non-US traders, that are able to operate outside the casino have entered the back door and are able to use that a mechanism we call the exchange for physical mechanism, which is just simply a question of taking legitimately taking a COMEX fiat gold position and converting it into a spot gold deliverable position, and unfortunately, the House is forced to keep this EFP mechanism open as much as they'd love to slam it shut. But if they did, then really the whole game would close. And so what they're doing is they're selling these fiat dollar chips in exchange for physical gold bars outside the COMEX. Now, this is what the central banks are accessing. And as we drew attention to last time, this is Nixon's gold for dollars window reopened. And under the chart painted illusion, global traders are recognizing this is the slippery slope that will ultimately force the COMEX to reflect a real physical price, and why this is an opportunity to be seized before a real gold price emerges during this year. Now, the volume of these unbacked fiat trades that can be siloed and subsequently squared off inside the casino, and this is the important part, versus how much of this freshly generated fiat gold escapes out the back door through the EFP facility, which the US-based casino traders are banned from using, remember. It is the exact pivot point that the Fed has to cover the paper bets. They cannot just continuously, they are forced to deliver. They don't have the bullion to deliver. The moment these EFP outflows hit the 10 times larger Basel III NSFR compliant deliverable spot gold markets, this fiat gold must, and I mean must, be converted into physical gold bar for delivery. The Fed has nothing to deliver. This rigged casino environment is increasingly forcing the House to dance around these very large Basel III compliant EFP outflows, which, while the Fed will continue to inject short-term volatility, it will continue to limit the downside while forcing a higher price in 2023 to progress. And this is not just about accumulating wealth. First and foremost, this is about wealth protection, wealth preservation, which a plus 5,000 years of back testing in gold proves is the only asset class on this planet Earth, other than silver, that can protect you against these self-serving bankers.
Well, Andrew, this really looks positive.
So, as I say, your only option, you're getting out of this to get into this. I like showing the Buffalo side. That's it. This is why we're buying this, because we got to get out of this, because this is bullshit. It's worthless. You either hold on to this and watch it go to zero, or you get out of this and buy this, which is what I do every couple of weeks. So today I took $700 and I got 20, I think it was $26. So it was 520. $250 for this. So it was about $560. Maybe this was $24 or $24.80. Anyway, this was 500 and something, and this I know was $250. And all I did was trade worthless this for good this, right? So worthless, big value. This is going down to zero. This is going up many, many, many times. So this is why we're doing this mostly, is to get out of this. So you're in a car. I'm in my Camry. It's now 15 years old and it's got 400,000 miles and it's not worth a lot. And it's wearing and tearing. It wears out. I either stay in the car until it drops or I buy a new car. I bought a new Camry. Didn't like it as much as the old one, but this is going out. But the problem is I can't buy euros, yens, yuan, rubles, Swiss francs, British pounds, because they're all the same. They're all going out because they're all Keynesian in charge, because that's what George Soros wanted. So he put in these Keynesians who all inflate, and he's blowing everything up so the Nazis can take over the world, which is what Hitler wanted in the first fucking war. So this is why you can't, there's nowhere to go but here. And then they'll say, well, there's no competition for the dollar. Yes, there fucking is. It's called gold and silver. This is the competition. The fact it doesn't go up has got nothing to do with demand. It's got nothing to do with the market. It's being forced down by price fixing. Now, I don't know how many times I got to tell people at the fucking pool, at everywhere else, it's not supply and demand. People think it's supply and demand. It's not. It has got nothing to do with supply and demand. As I said, I could buy every ounce of silver that they have, and it's still not going to make the price go up. This is why what the Hunt brothers tried was idiotic. They tried to corner the market and buy all the silver, but they bought contracts. They didn't buy this, and the contracts are unlimited. So they had no chance. These guys were a bunch of fucking idiots. Oh, they were billionaires, so they should have known. This is my point about billionaires. It doesn't mean anything. Just because you got a lot of money doesn't make you smart. And just because you don't have a lot of money doesn't make you stupid. You got to learn the person first and foremost. So anyway, this is your competition out of the dollar. This is what Andrew Maguire is talking about. This is protection one, but because this is hugely demanded and the price is not going with, eventually the price is going to meet demand. And that's the double kicker on this. Not only this is going down, but this is going up. So you have a double. You're out of this into this, so this will never go to zero. But now you've got this huge demand where this hasn't gone up yet, even though the demand's there. And when that happens, look out. I don't know why they price fix gold. I don't know what the difference is between that and a Mantle card or a Tom Brady card or a Rolex. I don't get it. It's all the fucking same fucking thing. I guess it's just because it's money and they're trying to say, oh, no, this is the real money. This is the toilet paper we want you to have. And they want a monopoly in this, and this destroys the monopoly. This is what they should have the monopoly in. And we'd all have we would never have inflation. We'd never have unemployment. We'd never have any bad things that they create. But they're all evil and they print and print and print. Because I have a monopoly in printing this. So I can print $1 billion, put it in my pocket. I can't print this, nor can I make it go to zero, because this is its own money and I can't touch it. So I can fake this COMEX printing. How these people in these other countries are so stupid to buy gold in US dollar prices. They're out of their fucking minds. What a bunch of idiots. Just make your own market. Okay, China, you got 60,000 tons of it. Fucking make a price for it. Make a market, put a price down. Oh, $30,000? Okay. Now, the reason they can is because Well, I can buy it. I can spend $250, or let's say I bought an ounce. It would cost, I could do it for $2,000. You want to sell it for 30,000, but I can buy it for two. Why would I buy your 30,000? That's what prevents it. But we need to blow COMEX up, which we're working on it.
I would suppose in 2023, for anyone holding physical and not paper pretend silver or gold, but maybe you can bring us up to date on what people can expect. They're watching the show and they're asking themselves the question, what's happening like right now, what to expect?
Yeah, and so, yes, short term, obviously.
Tell us,
So
Andrew.
let's look at where we are following what was, again, a Fed-infested 2 weeks. And you could just look at the chart and see the Fed was active. That was since our last episode.
This is why gold's
Powell
price is
largely
down.
now in the rearview mirror, having already spun the mantra. So what we see is what to expect as we enter the July trade is what we need to look at. Now, we're recording this on Tuesday as we head into options expiry today, and where the COMEX July contract, silver July contract, rolls over into the September contract. And that will be followed by first notice day on Thursday, which means that a speculator would have to step up, and an owner of those shares would either have to step up and fully fund that, rather than just trade the small amount of leverage it takes to control that position, which means the specs will bail, leaving really just the commercials holding the last contracts after first notice on Thursday. And then we'll see the delivery of this deeply underwater July contract into a massive supply deficit on Friday, which is when this episode will be released. So you'll be seeing it. And the first thing to note is that the underwater option structure that we're going into today is that when silver contract rolls over and goes into delivery on Friday, that these insider market making commercials, thus the COTs as we call them, are on the long side of the bearish spec bets made against gold at 1970 and 2000, and in silver futures at 23.5 and through to 24. Now, this may take until next week for insiders to ring the register on these naked short speculators, but nevertheless, that is their commercial sweet spot. So we're deeply under that. And picking up the action into the heavy 2 weeks of Fed-driven action, the official high-frequency trading, directional COMEX-centered naked short sell bots, these algorithms, had waited, if you remember, and this was last week, they waited until to really make the lows, and this is where we think the overshoot happened. They waited until the Chinese exchanges were closed for the 2 days of the Dragon Boat holidays. And then they pulled the trigger in very thin liquidity to ignite what was actually a very aggressive spec long stop hunt. I think they did not factor in, and they did not factor in that the speculators that are now sticky and are using silver and gold as legitimate hedges were not rinsable. Therefore, they lacked as much cover as they anticipated. Now, while the SGE holiday officially commenced on Thursday the 22nd, you have to go actually back to Wednesday because it went from Thursday and Friday through to Monday. The COMEX footprints evidence that the aggressive official HFT sell ignition was actually ignited at the moment the SGE closed shop on Wednesday, the 21st, timing the selling for just after London opened on Wednesday morning. Now, this maxed out COMEX-centric gaming enabled a full Western market 3-day window for officials to rinse out as many specs as they could. However, based on the footprints, liquidity providers reported that the thin market overshoots of the waiting central bank spot gold bidders, it overshot that level, and really it was driven by a massive spec capitulation, but they were unable to cover into the sticky specs. And this is just maybe a bit technical, but it is actually what happened. However, given the disconnect between the wall of COMEX paper selling and the waiting central bank demand, it strongly suggests this overshoot resulted in a cartel miscalculation. And while the SGE was closed, the PBOC Central Bank of China was reported to have been active, locking in deliverable NSFR compliant spot gold for delivery, monetary gold flowing out of the system into China. And while there is no doubt the June gold and silver derivative selling was an officially orchestrated chart painting exercise, it has reached limits that have been pushed the short cover envelope to the absolute extremes required for these agent commercials to be able to equitably ring the register and short cover into a growing overhang of these upcoming T+2 sovereign and central bank delivery demands. Now, this is yet to play out. And as we observed last Friday morning into this paper to physical disconnect, crosses began evidencing very strong concurrent safe haven gold and silver inflows into a strongly rising dollar. Now, that is always a signal. Digging a little deeper, following the Friday Asian Open, what we saw was signs of a distinct change in behavior as this inverse dollar index gold and silver correlation reversed for the first time since the March lows. Now, these are the telltale signs we're looking for. Oh, yeah, sure, you can see them covering up and papering over it, but that is a sign. And while Chinese markets were absent last week, the PBOC was reported to be behind the very large official gold buying. Now, the fresh dollar index gold-silver disconnect, not seen, as I say, since March, reflected that there were sufficient NSFR-compliant, unleveraged Asian physical buyers to force commercials exposed to a wall of spot gold buying to short cover, sufficient to offset the automated, led-by-the-nose, gold and silver-centric sellers, basically, selling into a rising dollar index, that was. There are also credible reports that this PBOC gold buying was a reaction to escalating geopolitical tensions relating to China. And our insiders report the PBOC is readying for sanctions relating to an ever more likely conflict with the US over Taiwan. Now, Biden's dictator comments were not helpful. And while Yellen tried to walk it back last Friday and is probably going to China to kowtow a little bit, it is clear sanctions are being hedged with unreported monetary PBOC gold purchasing, and that is accelerating. And with the rate hike fears spun by Powell and the Fed plate spinners, that's going to continue to weigh on markets and provide a boost to the dollar index. But it's increasingly realized that this hawkish stance also raises concerns that the next leg of a banking contagion will be reignited. And this will assist gold offsetting dollar index strength.
That's amazing, Andrew. Now, I'm not alone here in saying this because I know we have a very large part of our community wants to hear about the strange action that's happening in silver. What's going on there?
Yes, Shane, of course. Look, silver futures, we've covered this before, but they are far more sensitive to the speculator-driven, this inverse dollar silver correlation. So it's, basically one up, the other down. So as a result, with the dollar rising, it's become grossly oversold into a massive physical supply shortage. And as we assessed in our last episode, even though silver is not NSFR compliant, the compliance department of every single first-tier bank, yes, the very same banks that are long gold, and the major first and second-tier liquidity providers are also forcing similar compliance as they do with gold, which places silver in a very similar physically driven short squeeze situation. Now, as a result, on and off ramps, that is the authorized participant gatekeepers in SLV, and you remember SLV is that illusionary exchange where you can actually swap a futures contract, you can short silver in the SLV, but they've been evidenced to be cutting their short positions. Silver supply is in an increasing deficit and consistently being jumped on by Asian and Chinese buyers into the blinkered spec held current. I've just got the helicopter coming over. Just bear with me.
They're coming to take them.
No, they're not coming for me.
Yes, they are, Andrew.
right
That's the
outside. Never
Keynesians.
mind. So as we were saying, look, so really what we're seeing is this short covering. And it's because these discounts are being jumped on by Asian and Chinese buyers into the blinkered spec held current synthetic deep discount. Now, also, given the underwater option structure, which we just discussed, it also indicates a commencement of really a spec short squeeze up and coming with insiders on the long side. Now, bottom line, and we need to get options out of the way. This is a huge mark-to-market event. End of week, end of month, end of quarter. Of course, you're going to see a big options expiry. Bottom line, silver is the most oversold since it bottomed out at just under $20 back in March 2020, March 2023. And given the supply deficit and very strong Asian Indian demand, it looks very attractive as a buy with a very limited downside. And if you're a stacker like you, Shane, and so what you say, you've already been all over the discount. Well, I guess really. That just leaves one question left to ask, guys. How much physical gold and silver do you own?
All right, thanks.
Sorry about that. I get a little tired. Yeah, I mean, that's it. So it's about to blow. It's about to go way, way higher. So as these COMEX guys are driving the price down, before nothing would happen. Now, China and Asia are buying at these prices. And they have to deliver, and that's what's happening. Now there's, I don't know. There sure seems to be a lot of ounces of silver, considering it's not that many ounces of silver. It's not that big of a market yet. I guess nobody's been buying it. So that's why I can still go to the coin store and get it. And we know how limited this is. So these are both very limited assets. They dig it out of the ground and they do it. So keep that in mind. So these are both going to go through the moon, but you're doing it because this is going to zero. You keep printing it, it goes to zero. The advisor to Biden says, no, we shouldn't be the reserve currency anymore. So he's inflating by printing the money and nobody wants it. The de-dollarization is, I don't want your dollars. No, I don't know why they got to do it. Just go ahead and buy gold, which is what the central banks of all these countries, China, Russia, India, are doing. They are buying the physical gold and silver, and their central banks. And I'm sure Putin's got a whole big basement of it and everything. So that's what's happening in gold and silver. I like to show the video so you get their flavor, even though it's pretty much what I'm saying anyway. It gives you a little reinforcements, because at this time we need some, because we're like, what the fuck? Why is COMEX down again? Why isn't it going up? We know it should go up. We know it's supposed to go up. We know inflation drives the price of metals up. Why the fuck isn't going up? And that's really what happens. We get that, and sometimes we need to be like told by these guys, hey, no, you're fine. Don't worry. How much do you own and stuff like that. So, I hear this, I go out and buy 20 more, even though I've got plenty. I go, it's a bargain. Then you hear some idiots going, oh no, gold will never go to, 30,000 an ounce. Yeah, you're right. It'll go much higher, because they're the ones who don't get the difference between physical and paper. Paper gold's 2,000, but so paper gold is $250 for this. Does this look like paper to you? No, it's physical. Can it go to zero? No, that's impossible. Can this go to zero? Almost 100%. Yes, it will go to zero. It is 100%. So this is the thing. So when they quote these prices, so when I paid $24, $25 for this is the paper price. Does this look like a paper coin? No, this looks like physical. What's the physical price of this? Unknown, but we know it's a hell of a lot more than the paper price of 22, because the paper. There's a lot more ounces of paper. The only problem is this isn't paper. This is real. This is physical. This is what this is. This is not paper. This is this and this the same thing. Here you can print and print and print and print. That's what they're doing. Let's assume this is the silver. They're doing paper just like this and lowering and raising the price of this because they're doing paper, and there's no limit to the paper. They're just printing it. I'm going to sell 1 million ounces of paper silver. And my whole point is we don't care about the paper price of this at $24. We care about the physical price. What is this worth? Because you can't print this. And that's where we're talking at least $2,000 an ounce, because there's not that many ounces out there, and the demand is here and the ounces are here. It's got to drive the price up. Mickey Mantle, Tom Brady, Michael Jordan. These cars that are limited, they have a huge price because there's more buyers than sellers, and that's what you have here. There's more buyers than sellers, and then people will go, well, that's because Tesla wants this for his batteries. Well, that's even better because there's only so much of this, and if people are buying it like we are to put in their assets. So my assets now consist of a whole lot of silver and a whole lot of gold versus Mantle. Well, and I got Mantle cards and ore cards, and I got. I just don't have Rolexes. I never was a Rolex guy, but having assets is you're out because you can't print the assets. This gets printed to zero. Paper silver and paper gold get printed to zero, but that's paper. That's why we say don't buy paper. This is what an ETF is. So the difference between this and an ETF is nothing. And if you think, see, this is an ETF, worthless. If you buy, you want physical. That's why you don't want an ETF, because this is real in an ETF. This is paper. You don't want anything paper. You don't want IRAs. You don't want stocks. Stocks are paper. So you don't want that. You want the real McCoy. That's the whole point. So that's what you need to understand. That's why you buy physical, because they can't do anything. You buy a Rolex, you take the damn Rolex home. You buy this, you take it home. This is mine. I'm taking it home. This is not staying at the store. Well, I'm going to buy the paper whiskey or the paper Coca-Cola or Oreos or whatever you want to call it. You know, what's funny is I get my video flagged because I put a rock video on for 20 seconds about smelling what he's cooking, but I can do Andrew Maguire and alligator and all that, and nothing ever happens. Just amazing. Anyway, I see these shows on YouTube, and it's the same Rickard and Maloney and all these idiots who don't understand the difference between paper and physical. It's like, what are you doing? And to get Rick Rule to say I'm not an economist, I'm a credit analyst. Then what the fuck are you doing on there? You don't even understand Say's law, supply and demand, and all that shit. What the fuck are you doing on a show pretending you know it? Rickard's just a CIA analyst. He's not an economist. Maloney's not an economist. And Schechtman's not. So why? And then the problem is, and Schiff, they are not economists. So they are salesmen. One guy, Schechtman owns Liberty and Finance. So he's a salesman. You can't listen to those guys because they don't know what they're talking about. Yeah, supply is up. Okay, we got that, idiot. But until we get rid of COMEX, the price isn't going up because it's still being fixed. So we got to get rid of the fix. So that's why you got to have patience. But if I have physical, I know it can't go to zero. Nobody can take this away. So I'm just waiting for this to actually get to the real price. But because of BRICS and because the dollar's collapsing and this and that, then it will go up. And you can't worry about them believe me, they'll take your Rolex before they'll take your gold. And you can go to other countries, you can go to drop it in Switzerland or Amsterdam or Britain or whatever. do that. Britain's collapsing, the euro's collapsing, Germany's going broke, and Japan's going broke. So how safe are you with your paper money in a fucking bank? They're printing this to zero, and you got $200,000 at Wells Fargo. You feel pretty comfortable with it? It's not worth anything, and get it out. And do not ever put a safety deposit box at a bank. When the bank closes, you can't get your safety deposit box. So if you do have a safety deposit box or a safe, put it in your house, put it at some storage unit, U-Haul or whatever, and lock it up. Don't leave it in a fucking bank or any government facility that can shut down. That's my advice. Okay. Keep it safe. Oh, one thing I wanted to point out was Irina sent me this yesterday, and I couldn't believe what I saw. This is in Romania. This is not at a zoo. This is in people's houses. It's a fucking bear with 3 cubs. And the bear is looking for food. I couldn't believe it. She's freaking out. She's got the baby, and she's like, we just got this urgent warning not to go outside because of bears. And then she's saying, well, the government has cut down a lot of the forest, so the bears' food supply is lessening and lessening. So now they got to look for food. She says, and they're eating chickens and cows and animals that people have farms. She lives more in a farming community. So people who, let's say, have chickens in the backyard, the bears are eating the fucking chickens. I don't blame them. I'd eat them too. But are you kidding me? The big bear with 3, somebody took her walking on the street. So just walking on the street, she's got to get in her car and go somewhere. Man, I'm looking for bears. Like, fuck. Now, I don't know. Doesn't seem difficult. I don't know if they kill them or they tranquilize them. But then where do you put them? So you tranquilize them and you put them back up into the woods. They come right back down because they got the food. So you probably have to kill the bears, put it in a zoo or something, or in a cage. But very, very rough. But she's got a baby. She can't be out in the stroller, and here comes a fucking bear because the bear's going to kill you. This ain't Yogi Bear. You're going to get killed by it. So keep that in mind. So she sent me that like at midnight, and I couldn't believe. So I'm just saying, stay safe. And that was about it. I'm waiting to hear about the dam from Jenna in the Ukraine. When they blew up the dam, how much damage is it affecting her? The bank's still open. The grocery store is still open. So she's still able to, I can send her money and she can eat. So that's still available. But I couldn't believe this from Irina. That was just amazing. So I think that's about it. Tomorrow's a good football. We can digest some more football, college and or pro. Let's go through the baseball one more time. So the Cubbies are up. Now the Cubbies are over. San Diego, Cincy are zeros. Washington, Philly, we liked. I think we liked Washington. Minnesota, Baltimore, we liked the over. Milwaukee, Pitt. I think we like Milwaukee. Boston, Toronto, we liked it under. The 49ers and the Mets, we like the 49ers. Bobby's got to get rid of this Carlo Carrasco. Oh, my God. Miami and Atlanta, we like Miami. I think that's our lock. Houston, Texas, we like Texas. The Dodgers, KC, we liked the game over. Detroit, Colorado, we liked over 11. Both pitchers suck. The Yankees in St. Louis. That's over. Both pitchers in the fives, Arizona and California. Again, that's an over. Both pitchers suck. Chicago, Oakland, White Sox. We like that over. And Tampa Bay, Seattle. We like Tampa. That's another lock with McClanahan. The Cubbies won 10-1. And here's a perfect example. Justin Steele, 9-2 with a 2.43 against Cal Quintal, 2-5 with a 6.18. This is exactly what we're doing. So the 2.4 ERA beats the 6.1 ERA. Well, as you would expect, he gives up 1 run. The other guy who gives up 6 gives up 10. That's exactly the point of the whole exercise that we're doing. So play McClanahan and play the other game. What was the other game? Play the 49ers and play Miami. 49ers, Miami, and Tampa Bay. Those are the big bets. Anyway, so have a good day. Happy 4th of July. I'll be here tomorrow and Sunday. I am working Monday, and then I'll be off Tuesday. So, yeah, I mean, normally I would have taken Monday off to get a nice 4.5-day vacation. Today's a half day, so I would have taken a half day, Saturday, Sunday, Monday, Tuesday off. It really just recharges you. But since I've been off for 6 months, I didn't need it. But you can see I'm tired. The work week's tiring me out, this 9-hour stuff. So it's 8 to 5, Monday through Thursday, and then Friday, 8 to noon. So I already like today. And then instead of relaxing, I go get my gold and silver, go to the grocery store, go swim, and I'll teach the class. So that's why I'm kind of tired. I could have slept. I could have taken a nap before, but I want to get out. So I'll probably go to the lake and walk, and I got to go I got some chicken and salad I'll have for dinner and kind of relax and kind of try to stay healthy. Since I've not had salt, since I've taken that out of the equation when I'm cooking my meats and my veggies and my omelets, my foot's been fine. It kind of got better, and now it's absolutely fine. My back's much, much better. So I think I was putting too much salt in the cooking, and then I'd go get a diet pop or I'd go get a bag of chips, figuring, I'll be fine. And it's killing me because there's too much salt. So by not putting salt in, my feet have relaxed and I'm fine now. So that's good. Anyway, that's about it. Buy your gold and silver is all I can say. Is the dollar's going to zero. The Toyota guy, the sales manager, says, is the dollar done? And I'm like, you already know the answer to the question because I've already taught him, right? So when I'm waiting for my car, I'm teaching economics. And so with him, I go to him and I say, he says, so the dollar's done. And I go, you know it. You already knew the answer. So I told you, you cannot print it. You print it to oblivion, you're fucked. We're fucked because they printed it. And every country's did it. And all you can do is really go to just buy your gold and silver, and then you'll be able to go wherever you want. But he says, where should I go move to China or Russia? I said, absolutely not. Even though they have the gold, they're communism. And communism, there's no freedom, there's no Say's law. It's not like, I want to buy this and that. It's not going to be available because the communists tell you what, this is. You can only buy almonds. You can't buy unsalted, and you can't buy cashews. You can't buy pistachios. That's the way communism works. So nobody wants that. There's no freedom. So we got to look for countries that still have capitalism, like maybe a Switzerland or Amsterdam or something like that. I know Amsterdam's not a country, but to me it's a country. Anyway, so have a nice weekend. Buy your gold. I'll be on about 11:30 tomorrow, and on Sunday, definitely. We'll talk more sports, whatever you guys want to. And that's it. And I need to shave, and I need a haircut soon. I was out in the car, and the wind blew my hair, but I showered after swim, so I'm okay. But That's it. So don't get frustrated with the gold and silver price being held down by COMEX. That's paper contracts. That's the same. That's like getting frustrated over the value of this going down. Or more frustrating is when they say, oh, inflation's going down. Okay, anybody that tells you that is a fucking idiot. Because once you print the dollar to zero, you can't unprint it. It's done. You can raise interest rates all you want. All you're going to do is kill the, and you can't raise interest rates from 0% to 5 and think we're not in a recession. Things cost more. It's got nothing to do with employment or unemployment. It's the market, right? If steaks are $20 a pound, I hate to break it to you, but they're not selling. I mean, you get some sales, but you make them $5 a pound, then you'll see some sales. So be very, very careful. Buy as much of this and as much of this as you can. I bought a whole 20, and they lowered he's lowering the premiums, and I'm just thinking to myself, this guy's a fucking idiot. The premiums are low anyway. The whole price is low. This at $24 an ounce is low to start with. This is worth at least $200. So 24, and then you're lowering your premium because the guy making them can't sell them fast enough because people aren't thinking about gold and silver. They're thinking about Amazon and Microsoft, and they're not thinking assets. You think assets because assets won't leave. That's why people get into houses, right? Oh, I'll buy a house. They don't even know why they're buying a house. They don't know why it won't go down. They don't know why they make money at it. It's an asset. So therefore, it drives demand up. This is an asset, drives the demand up. That's why every central bank wants it because they know it's safe. The demand for this goes up partly because of fucking electric cars and solar, but really because it's money. This goes up because it's an asset and it's money. Just like gold, people demand it. And they don't know why they demand it, but they demand it because it's an asset. You always want assets. Real assets are the key. They get the heads. That's why I've got so many baseball cards. I wish I'd have bought more gold, but I'm buying it now. So that's all I can say is, but I'm going to do okay with the Mantle card and the Montana and the Rice rookie and the Jordan and all the 86 and 87 flares and all that stuff, the 86 baseball tops, the 85 baseball tops, the 68 baseball and football tops. So I'll do okay because I made sure that 99% were either in mint condition or the best condition I saw. So if I got a card that's a little bit off, that was after looking at 100 of them, the best card I could find. I just couldn't find it in mint. It was either hard or the guy had a bunch of mint and wasn't wanting to selling them. And I don't blame him. I wouldn't have sold my mint cards because I didn't need to. People don't know to buy mint in the first place, and I'll keep the mint cards for myself. But that's what I did. Anyway, buy your refractors and all that. What do we got? We're in July. Well, no, we're in June 30th, July tomorrow. And that's when everything will go. We'll start going. Football is not 1 month away. July, it's in August. At the end of August is college. After Labor Day is the pros. So we're getting real close to it. Keep that in mind. So my advice is buy as much gold and silver as you can. You can't lose. It's impossible to lose money. They're not going to take it. They might as well take your Rolex or your Mantle card just like they can take your gold. They don't know you have it. You're under the radar, and it's an asset that you want to get out of dollars. So you're really doing it because you don't want to be in this. You're getting out of this. That's the critical because it's paper. This is the same as COMEX. They can print it to death. They can sell 1 million ounces of fake silver, or they can print a trillion of these. It's the same thing. It's printed. It's not real. This is the real money. This is the real asset. You're buying it because it's an asset. An asset means it holds its value. And that's what you want to buy. So anyway, just understand that. Understand COMEX is fake. It's like printing the dollars. Don't believe it for a word. Inflation's going away. It's not. You can't make it go away. I've printed 10 trillion of these. What does interest rates do to the 10 trillion? See, in their mind, the interest rate slows the economy because they think prices are inflation. They don't get, or they know and don't want to say that no, the inflation is I printed too many of these. That's what the inflation is, but they won't say that because then it's they fucked up and they can't admit they fucked up. They're a bunch of losers. So we're going to be the smartest kids in the class, okay? And that's what I have you doing. And we're 5 steps ahead. We're buying the silver and gold now because it's cheap and we can still get it. As this goes out and everybody starts running. Remember in the Titanic movie, when it first hit the iceberg, nobody was moving. Oh, we'll sit in our, we'll stay in our bedroom or at dinner or whatever. Nobody understood that it had hit the iceberg and it's going under. And then as the water starts seeping in, people start getting it. That's what we're at. We've hit the iceberg and we're buying this because we know if you keep printing the money, it goes to zero. That's what happens. That's logic speaking. That's a master speaking. And as that keeps happening, we know it goes to zero. We know there's nothing they can do. You cannot stop the water from coming into the Titanic. It's just recognizing you've hit the iceberg and the water's coming in. You better get the fuck out. Not sitting there ignoring that, which everybody's doing. And then here comes the water and you're like, oh shit, we need to get to a lifeboat. Oh wait, there's only half of the lifeboats available. There isn't a lifeboat for every passenger. Some idiot did that. I mean, it's just beyond belief how stupid these people are. So this is the lifeboat, right? And you better buy it now while it's cheap. So what's the worst that happened is you buy this, it's cheap, $250. You can still buy it. And nothing, they're right. Inflation goes away and gold never goes up. I go back to the store and sell it because the guy at the gold store is going to buy it no matter what because he's going to look at spot. Spot's based on worldwide demand. It's going to be a hell of a lot higher than it is now. So you can't lose on it. It's not like this goes to zero. This is 250. Maybe it drops to 240. I mean, it's not as the price has been going down. This hasn't. This is still 250. The ounce goes down a little bit, but not these. So you have nothing to worry about. You can't lose. You can only make money because this is going to zero. So you're avoiding this going to zero. You're not just sitting there. Oh shit, the water's coming on the boat. Maybe I should get off the boat before the boat collapses. And what I'm saying is the boat's collapsing. Get into this. And most people don't have a fucking clue that the boat's hit the iceberg already. So we do, and we're doing something about it. Or you can just sit there and, stare into space or put your head in the sand like a lot of these idiots, these communist liberals that I meet at the club that, I'm going to hold on to this. But the water's filling the first floor. So imagine me on the Titanic. I see the iceberg hit because I'm an INFJ and I'm going to notice that. And I go to these people, we hit an iceberg and the water's coming in. We're going to sink. I would probably get off. I'm going to go find a lifeboat and I'm going to get off. And they're like, oh no, I'm in oil stocks. I don't believe that. No, we can't sink. We're the Titanic. No, if it's water, it's just a bathtub overflowing. No, it's not sinking. That's about what I feel like. No, hit the iceberg. There's definitely water coming in, and we're definitely going to sink because 2 and 2 is 4. And that's how these people are. They're like, oh, no, the water's not coming in. It can't. We can't sink. We're the Titanic. We're America. Our dollar cannot be inflated. You know what? Because Biden said that the inflation's down, or Powell or whatever. No, inflation's down to 4%. You believe that, don't you? Yeah, the sky's green. I mean, yeah, just tell whatever lie you want. Maybe people actually believe it. I don't know. But that's what you have, and it's really, I don't know how to tell people, look, the water is coming in and we're sinking, and they ignore it. I honestly don't know what else I can do. I mean, it's just you scratch your head. And oh, look, the water's not coming. Okay, I'll tell you what, if the water doesn't come in and we don't think, you can row the boat back to row your little lifeboat back to the thing. We'll pick you up, and you'll come back on the boat. How about that? That's the worst that happens, is I'm wrong, and then you can get back on the boat. But we all know I'm not, because we can see 2 feet of water coming at us on the first level. So that's about what I feel like. That's why I use the Titanic as an example. I mean, these people are so fucking clueless. Part of it is they don't understand to think, right? I would see it. See, I watch people. Being an INFJ, you watch people. Pretty girls, ugly girls, guys, whatever. But I look at them, and some of the girls go, oh, he's staring at me, I'm uncomfortable. I'm not staring at them. I'm observing them, just like I'm observing in a poker game. I'm observing at a football game. I'm observing in gold and silver. I observe things. I see what makes people tick, what makes gold go up, what makes inflation, why it hit the iceberg, the Titanic sinking, because they hit the iceberg and the water's coming in. So I put all of it together. That's what I do. So when I look at a girl, I'm staring, I'm analyzing. Well, I'm seeing the pieces, going, what is this? What do I got here? And that's what I kind of analyze it. So much the same with gold and silver. I'm analyzing what's going on, and I immediately see, oh, it's inflation. Oh, it's going to go to zero. Oh, I better buy gold and silver, because I can't. My initial analysis 2.5 years ago was, well, Biden's printing $10 trillion. It's inflation. It's going to go to zero. I better get my money out. And then I said, well, there's nowhere to go. I can go to euros, Swiss francs, British pounds, but you know what? They're all going to zero. So that's what led me to gold and silver, was that quick analysis that I got to get out of the dollar. It's going to zero. So that's what you do. You see a pretty girl, or if you're a girl, pretty boy, you got to kind of analyze and go, well, just because they're pretty, what if the girl's a bitch? What if the girl's nice? What if the girl's stupid? What if the girl's smart? What do I analyze that? Just because she's pretty, do I want to talk to her? And that's really what if they're nice and they smile, then okay. If they're not, then you don't. And that's what you're looking at. You're not looking at their looks. You are to get attracted, but then after, you're looking to see what type of girl it is, or boy, or poker, you're looking at the players and you're seeing the way, how does this guy play? Oh, she's a bluffer. My Russian friend, she's a bluffer. Wait a minute, she didn't bluff that hand. She must have a good hand because she didn't bluff. Oh, she's bluffing this hand, she must have shit. And that's how you analyze what's going on. You're really analyzing the bet. You look at me to pick up a tell, you're not going to pick up any tell, because I'm going to sit there and give you fake tells because I know you're watching. I'm going to make it look like I have nothing and I have a full house, or vice versa. So you're gonna read me for some tell. I'm going to give you a fake tell. That's why you can really only do it based on betting. She bets, she's a bluffer, she's got nothing. She checks, she's a bluffer, she's got a full house. That's what you read when you're looking at it, and that only. So anyway, that's what you're trying to read. You're trying to read, there's the iceberg, we've hit it, now we're sinking. So you put two and two together. You put the story together. She bets, but she's bluffing. And when she doesn't bet, she's got a hand. She's nice, like the gal in Alabama, but she never talks to me. She kind of is rude. Okay, I don't want anything to do with her. That's a little more emotional, women and men and sex and stuff like that. But that's the idea, is to get a feel. Okay, yeah, they're attractive, but then what, right? Or they're bitchy. Yeah, she's pretty, but she's bitchy. So that doesn't mean anything at all. It's a little bit, but maybe you take one that's less attractive, but she's nice. I mean, that's really the point of it. But that's what you're trying to read, is the type of person. You're trying to get to the next level, not, oh, she looks pretty, but it's, she looks pretty, but is she my type? You're trying to get to the type. So you do it in poker, you do it in football and baseball. He's a good pitcher, but he sucks. He's a good quarterback, but he can't hit the broadside of a barn. So like Lamar Jackson, I don't look at him and is he a good quarterback or not? I go, he can't hit the broadside of a barn. And that's a pretty important thing for a quarterback, to hit his receivers, and he can't do that. How are you going to win with it? So that's why I sit there and laugh. Tom Brady, passionate, he's a winner. Aaron Rodgers, Mahomes, Burrow, they can hit the dime from a mile away. They're leaders. Players play for them, and they can throw the ball, and they can read the defense, which is most important when you're looking at it. And that's really what you're looking at when you're looking at. That's why I love Rising, is I can see. He sees the whole field. He wins the big games against USC. He's a winner. That's why I like Rising, as you can see. That's what I saw in Montana. And that's, so when I look at a quarterback, I can immediately see he's not good, or he is good, or he's clutch. He's not good. You can see his receivers, or he can't. That's why I pick on the Alabama and Ohio State quarterback. They don't know what the fuck they're doing. They can do it in a system that's made for them, but they can't do it when they're not in a system. Like on the Bears, Fields can't do shit. JT Barrett couldn't do shit at Washington or a few other teams. Yet Mahomes, he's fine. And Burrow, superstar. And that's the difference. Rodgers will be no problem on the Jets because he got some of his receivers, and Hackett, his offensive coordinator, are there. So he's running a Packer offense with Packer receivers and a Jet defense that's like the Legion of Boom. That's why I like the Jets. So you're putting all these observations sort of in thing. I'm a lot like Adam Smith and Say, because Adam Smith observed that that's how people are, and so did Say, and that's why it's Say's law. Let the people, they're going to buy what they want. They want the donuts, they'll buy them, and then the people will make them for it. So it's like, what do people want? That's what we're going to make. That's economics, basically, pretty much. This is economics from people want this. If people didn't want this, gold wouldn't have a value. Nobody would buy it. People want this because they think it has a value. So therefore, they want to buy it because it's got a value, but they don't realize it doesn't have a value. It's worthless paper. So this is what I'm trying to tell you. This has no value, but people don't know it yet. So take the value that this is giving you, even though it doesn't have any, and go buy this, which has a value. That's why all the central banks are buying tons and tons of it, because it has value. That's the whole point. And the silver too. They're both money. They both have value, and there's both huge demand. Even though it's being held down, that's to keep you away from it. It's like somebody buys a nice chocolate cake. Oh, it doesn't taste good, and it tastes great. Or a girl or a boy. Oh, they're in trouble, and they're really very nice people, but they don't want you talking to them. So if I'm a guy and I really like this girl, and let's say it's Jenna, I really like her. Oh no, she's stupid. She's not nice. She's this, she's that. So you don't talk to her. But she's really nice, and I want her. So I'm keeping you away from her. This is Jenna. This is the point. They're keeping you away. Oh no, gold. You don't want gold and silver. It doesn't give a dividend, and it's this and that. And they're keeping you away from it. Well, we'll keep the price low. That'll keep people away from her. That's exactly what they're doing. This is what you want, but they're keeping the price down. So you sit there and go, hell yeah, it doesn't go up. I'm not interested. And that's what they're doing to you. They're forming a non-interest when there's a huge interest. And that's why look at what the central banks are doing comes out, because, well, if they're buying gold, it must be something good to buy, right? If I'm dating Jenna, she must be a good girl. Why would I date her? So that's the point. Anyway, go have a good weekend. I love how these thoughts just pop in and I go with them. But that's really that's it. It's all perception, and it's all value, and it's all, you can't print this and you can print that. I don't want to be in ETFs because they're printed. I don't want to be in stocks because they're printed. I don't want to be in money because it's printed. I don't want to be in the banks because it's printed. I want this. Once you kind of get that grasp, you don't look as much. So that's what Aegon says. He doesn't really look much at the price. He's grasped the concept. This is zero and this is what you own. So I don't care what the price is. I don't want to hold this. I want to hold that. And that's what Alistair Alligator says and Andrew McGuire. That's what they're saying. The other guys the Americans have no clue what they're talking about. They don't understand. They don't understand COMEX from that. They buy it, but they can't explain it. They can't explain that this. I know this is going under because they don't understand inflation. They think it's prices. They think there's deflation. That doesn't exist. Anyway, so that's what's going on. All right. I'm exhausted. I'm going to go eat. I'm going to take a nap. I'm going to go to the lake and walk. It's still nice and sunny and warm out, so I'm going to enjoy that. All right, everybody. Have a great day. www.teaserking.com. Look for me about 11:30-ish. 11:30, 12 tomorrow and Sunday, and whatever you want to talk about. We'll get a little bit more into sports, but I think I really nailed it with what I just said, which I gotta digest what I just said, but it was a really good one. The deflection. Oh no, you don't want that because it's not good, even though that's exactly what you want. All right, everybody. Have a great day. www.teaserking.com. You want to email me? Nick, McClanahan's going. Take Tampa tonight. All right. Ciao.